Hey guys, what's good? I'm Andre and today I want to go over wheat with you guys. I was thinking about the fact that for very many traders out there, and I've heard it throughout Twitter, it can become complicated to understand why we're saying that something is a buy at certain thresholds. And so with that in mind, I wanted to take a brand new wheat chart. So for that, I went to NYMEX and generated a brand new chart here. I want to make sure that I actually take a look at something that I've never looked at before. So this is actually pretty different in terms of price action than the chart that I was usually looking at for wheat, because my trader doesn't use the specific one, which is from CBOT. So let's take a look together, guys. First off, thank you so much for all of the likes throughout the last few videos, guys. It helps me tremendously. So if you learn anything new from this one, please give me a thumbs up and consider subscribing. Now, the very first thing that I would start with is a very broad outlook of where we are in the grand scheme of things. Are we trading at a premium or are we trading at a discount on the longer term chart, right? So with that in mind, I would want to take a look at what the weekly trend is for us, and we can clearly see that as of spring 2022 the trend for the weekly changed to become bearish over here. As you guys can see, we are now moving considerably lower. That being said, it can still be viewed as a retracement in a grander, longer uptrend for the weekly trend. And so to establish how far we have retraced, I want to make sure that I take a Fibonacci tool and just take the lowest low I can find in this last move up and the highest high and just draw a Fib retracement of that. Now, do we include wicks or not? I usually include them because prices have traded there as well. Whatever you're trying to trade has been traded within those wicks, which means that that price was significant at a certain point in time. Obviously, we trust the body of the candles more than we do the wicks, because it means that within the body there was the most transaction happening. That being said, I still consider the wicks when I'm trading. And just by drawing this fib up here, just take a look, guys, and it's such an easy thing to see that this level over here that happened to be hit twice on the move up, or actually 3 times, and then we finally got a break above it. Now we came back to retest this exact same zone, which is where we are at right now, right? So if we extend this fib to the right here, we can see that we have now retraced 78.6% of the way. So this ultimately becomes an extremely important level for us to watch, not only because of the fact that it was the previous level from which we've broken out, but also because of the fact that for the weekly trend, this is 78% retracement. So that means that any bulls would be looking at these places to potentially add. Now, in terms of volume, I know volume can be a pretty difficult topic for a lot of you guys, but I would recommend to just make sure that you always have some sort of a moving average for volume. I happen to use a 20 moving average. You can use a 50 moving average as well. And obviously, being on the weekly, this means that it would simply plot a 50 moving average, a 50 week moving average of what we're looking at over here. As you guys can see, we have a lot more green candles than we do red candles in the last few weeks here, and the green candles are significantly higher than the red candles, which means that we might be seeing some accumulation around these areas. We can also see that there's been a tremendous decrease of volume as we kept going lower and lower here. Just look at how price decreases and volume also decreases in its moving average, which signifies the fact that we are less interested in pushing the price lower and more interested to wait to be cash and to see where the price moves next, so that we can potentially participate in an upswing. And as soon as that upswing happened over here, just compare the volume and see how well volume has picked up on that move up. This all for me signifies that we are now looking for bullish reasons to enter a trade. And whenever you're looking for bullish reasons to enter a trade, you need to make sure that you have confluence of more than a single thing for trading. And so let's again look at this chart and see what we can identify. I would probably start by tracing a couple of trend lines, and as we can see, this first one was broken above. The second one that we can probably drop from over here again, kind of broken above, but now back into it and retesting. So I'm just trying to make some ideas about what's happening here, right? But ultimately we want to let price action show us when it's time to go. And for me, honestly, that happens upon confirmation. So what I can see here, first off, is that we had this significant spike low over here in June. Sorry, let me draw this one here. So actually at the very end of May, we had a spike low here. We grabbed a lot of liquidity. So just imagine if you were somebody that way back in 2021 was buying at these levels over here, and you've decided to place a stop loss on your trade. Where would you stop loss your trade? You would probably decide to put a stop loss right beneath that, right? So anybody that has been long in this trade and decided not to move their stop loss and not to take profits back over here up at 1360 would now be stopped out by this weak lower here. So this means that we've had a successful liquidity grab over here, and then we ran that liquidity to the buy side, as you can see over here, all the way up to 765. Cool, so that put in an initial lower low. Now, I'm very happy about the fact that we also saw market structure shifting from going bearish and making lower highs and lower lows to now being able to put in a higher high over here and a higher low over here. But as you guys can see, we actually managed to put in subsequent higher highs, but we weren't able to put in subsequent lower lows, and we actually came back down to retest this area once more. Now, this can 100% be considered the inception of a double bottom, guys. For what it's worth, we can only claim that we've had a successful double bottom once prices rally from here up above the peaks that these couple of highs over here have formed. So we want to see that price action before being able to unequivocally mandate that this was a double bottom. And actually the way that you would be measuring that out would be to take this measurement from here and move it over above this area, and that would mean that we would be aiming for $960 for wheat when that double bottom formation is confirmed. So it's not like if you're not buying over here at the bottom, you're not ever gonna be able to find another in on the market. On the contrary, you can always wait for a move up here, a retest, and enter on this retest and make sure that you're aiming those $960 in terms of a movement. That being said, guys, I am long right now, and let's see how I decided to go long. So first off, again, we want to make sure that we look over here, and as you guys can see, we came down aggressively again, and once more we wicked lower here, which means that people that got long over here in this entire range, again, they would most likely be placing their stop losses around this area over here, right? So this wick lower would aim to grab all of that liquidity in terms of stop losses. It's not, I mean, you can call it market manipulation, you can call it algo trading, I don't care what you call it. It's just the way that the markets move, and the faster we understand how they move, the faster we can then move with them. And we grabbed liquidity, and what I loved the most is that, first off, this happened on the day where contracts were expiring, and so contango and all of that nonsense happened. We had a significant sell-off here on this day. A lot of people needed to cover their long contracts, and so had to sell them, and we got this opportunity to go long. On the very next day, we actually broke above with a significant gap over here, and gaps always show us the fact that there's a lot of demand happening at that range, right? So what would I do after this point? Well, I would be looking for good enough opportunities to long. First off, we can identify an order block over here, and so we would want to move higher from here, obviously. But then I would also want to draw a fib retracement in this zone, and then see where we're at with regards to this very small wave up that we have over here. And as you guys can see, we've actually successfully retraced 78.6% of the way again. And now I think that we are primed to move higher here. I think that initially we are going to want to take out the swing highs from over here at 646, and then I would ultimately want to trade this up into not just 760, but I think that over here we have some significant liquidity from shorts that have shorted the stock over here at or around $800, or the stock, the commodity at around $800. So what I would want is for price to actually do up here exactly what it did down here. I would want for the price to rally aggressively into this area, wick higher, and then move lower to probably retest this area over here. Guys, hopefully this helped kind of reference how I'm thinking about this chart, and you can then translate what I've said here on other charts that you're looking at. Please consider subscribing and liking if you enjoy the content. Check us out on Patreon if you don't want to do all of this work and just want to see our entries and exits. It's $15 for some of the trades and $50 for most of them. So I'm gonna catch you guys around. Thanks so much for tuning in. Take care.